Hey guys, welcome to our weekly news show here on Backstage with Millionaires. I'm Caleb, your host, and today we're going to be talking about the dark side of India's fintech boom, Nazara Technologies' IPO application, BharatPe's bid to acquire PMC Bank, the end of Hike Messenger, Cure.fit's latest acquisition, all of the latest funding news, including the first Indian unicorn of 2021, and more coming up right after this. All right, so first up in the news, last year in 2020, more than 120 million Indians lost their jobs, and Sunil Panditi was one of them. Sunil was a 28-year-old software engineer, and after getting laid off, he borrowed around 5,000 rupees from online lending apps that offered instant loans without any collateral. This was in June of 2020. By December of 2020, he had borrowed a total of 70,000 rupees from at least 35 different lending apps. This was a vicious cycle for him. He was taking loans from one app to pay for the loans that he had taken from another. He even ended up using his wife, Ramya Sree's phone to download lending apps as well. On December 16th of 2020, Sunil decided that he had had enough. He took his own life. And Sunil is not alone. There are at least 8 recent cases of people here in India taking their own lives after accumulating tons and tons of debt from these lending apps. Now, if you're anything like me, you're probably wondering, how did things get so bad for Sunil? How did he go from 5,000 rupees in debt to 70,000? Well, part of the reason is just how these loan apps operate. These fintech apps offer short-term loans varying from 7 to 30 days, and they charge high processing fees and exorbitant interest rates. I'm talking 1% per day compounded weekly. If you do the math, that could go as high as 1,000% when annualized. But I think one of the scariest things about these apps, which are relatively unregulated, is the permissions that they ask for you before they allow you to sign up. People who are looking for loans from apps like these may at times be in a desperate situation financially. And so they might not think twice about giving access to, say, something like their contact list, even though these kinds of apps really have no business having access to your contact list. Remember how I mentioned that Sunil borrowed his wife's phone so that he could download lending apps? Well, one of these apps, through the permissions that he gave to them, accessed her contact list. They created a WhatsApp group which included her family members and her friends, and they shared photos of her along with voice notes calling her a fraud. So yeah, this is obviously a very big problem, and people do need to be careful about the permissions that they give to apps, especially if they're borrowing money from those apps. But at the same time, I do think that app stores and even the RBI have a responsibility to protect people from these kinds of lending apps. In December of 2020, the RBI did recognize that there was a problem and warned people to be careful about such apps. According to the RBI, only apps that are working with registered banks and MBFCs are allowed to offer loans, and they also need to provide the names of their lenders. Furthermore, according to the RBI, these apps are not allowed to harass their borrowers. However, most of these apps are not regulated, and so they don't follow anybody's guidelines, not even the Google Play stores. The Google Play Store does have a no short-term loan policy, meaning that any loan app which asks users to pay the full loan back in 60 days or less will be deleted from the App Store. And so far, Google has removed more than 450 of these kinds of apps. But the question that I'm left asking myself is this enough? If people are taking their own lives because they're in such deep debt because they weren't able to pay back these lending apps, then maybe more serious action needs to be taken. What do you guys think? Let me know in a comment down below if you've used any of these apps yourself, and even if you haven't, what are your thoughts on them? Do these kinds of apps need to be banned? Should setting up such an app be treated as a criminal offense? Or should these apps be allowed to operate with impunity as long as they're not on an official app store like the Google Play Store or the App Store? Let me know what your thoughts are in a comment down below. All right, moving on to some more positive news, Nazara Technologies has filed the preliminary paperwork to prepare for an IPO with the Securities and Exchange Board of India. If they do end up going public, then they will be the first Indian gaming company to do so. And I say if because they did apply for an IPO back in 2018 and they ended up getting approved for it, but they ended up backing out because of unfavorable market conditions. The company was founded by Nitish Mittersain in 1999, and he was an undergraduate student at the time. Today, gaming is more or less ubiquitous here in India thanks to the depth of smartphone penetration in the country. If you have a smartphone, there's a pretty good chance that you have at least one game downloaded on it. But in 1999, that wasn't the case. Gaming was relatively unheard of. At that point in time, at the turn of the century, if you mentioned the word gaming, people assumed that you were talking about offline gaming. And for the first decade of the company's existence, that was their focus. They made a lot of games about sports, and they owned the IP of popular games like World Cricket Championship and Carom Clash. They established partnerships with famous cricketers Sachin Tendulkar and one of the world's largest sports video game companies, Electronic Arts. But the company didn't really hit its stride until the advent of smartphones. For the last decade or so, Nazara Technologies has been growing exponentially. They've set up operations now in 64 countries around the world, including India, and they're expecting to generate revenue worth 450 crore rupees this financial year. Now, my hope here, as somebody who does enjoy playing video games, is that Nazara Technologies will decide to lead the charge and go public. That way, other Indian gaming companies will have the confidence to follow in their footsteps. All right, next up in the news, I need to get your opinion on something. Because of the number of members that have signed up with Backstage with Millionaires, YouTube has given us 2 new slots for emojis. These are the 4 that we have right now, but I wanted to get your opinion on what you think the next 2 should be. So give me your best idea in a comment down below. Also, if you've made it this far in the video and you haven't already subscribed, now would be a great time to do so because we post new videos every single week about Indian startups, entrepreneurs, and the latest news. Also, you can find us on all of these social media platforms, and we also have a Hindi channel as well. All right, next up in the news, digital payment startup BharatPe has confirmed its bid to acquire the Punjab Maharashtra Cooperative Bank. Now, last year in August, BharatPe failed to secure a banking license from the RBI. And so that's the main reason why they're trying to acquire PMC Bank. If they acquire it, they will automatically become a digital bank. But they aren't alone in their plans to acquire PMC Bank. In total, there are 4 banks that have expressed interest in acquiring the Punjab Maharashtra Cooperative Bank, and so we're just gonna have to wait and see whether or not this actually pans out for BharatPe. BharatPe started things off like most other digital payments apps by enabling their users to scan QR codes to make payments through UPI. But the difference between BharatPe and most digital payments apps is that they're focused on merchants. Besides UPI payments, BharatPe also allows merchants to acquire loans at interest rates of 2% against their total digital transaction volume during a month. So far, they've processed loans worth 880 crore rupees, that's $110 million, and they're planning to disperse loans worth $2 billion, that's almost 15,000 crore rupees, by the financial year of 2023. So we're gonna move on to the next news item in just a second, but before we do, if you've made it this far in the video, I'm guessing that you're enjoying what you're seeing, and if you are, please do hit the like button. It would really help us out. Okay, back to the show. All right, next up in the news, Sticker Chat, which was formerly known as Hike Messenger, is finally being removed from the Google Play Store and Apple's App Store. The startup was founded in 2012, and they last raised funds back in 2016 when they were valued at $1.4 billion. Now, Hike's long-term goal was to create a super app. They added a bunch of features into Hike Messenger, starting off with free text messaging, followed by stickers, different themes, the hidden chat option, and they were also the first social messaging app to start a mobile payment service here in India. On top of that, they were also one of the first messaging apps to incorporate Snapchat's Stories feature into their app, which they called Timeline. By 2016, they had more than 100 million users, and they were one of the fastest Indian startups to become a unicorn ever. So what happened? Well, this tweet from one of the startup's co-founders might give us an idea. India won't have its own messenger. Global network effects are too strong unless India bans Western companies. Besides this, I think another reason why they failed is that they didn't properly implement their super app strategy. And this is something that we've seen happen to other startups as well, like Tapso. But I should say that this isn't the end of the road for Hike as a company. Instead of working on a super app, they're now working on individual apps instead. Specifically, there's an app called Vibe, which is a virtual approval-only community, and another one called Rush, which is a real money gaming app. So as always, I'm curious to know what you guys think. Was taking sticker chat down from various app stores the right call, or should the company have kept it around for a little while longer? Let me know in a comment down below. Alright, next up in the news, Cure.fit has acquired California-based AI-powered fitness startup Onyx. Founded by Asaf Avidan Anfonir and James Shah in 2018, Onyx offers a tech-enabled fitness app that uses your smartphone camera and AI to accurately track your movements during a workout, to count your reps, correct your form, and track your performance. Now, Cure.fit is acquiring this startup in an effort to make their online live fitness classes more interactive, social, and personalized, and to accelerate their business in international markets like the United States. Also, another update about Cure.fit is that they've added energy meter technology. Basically, what this means is that users can track their improvement, compete with friends, post selfies, and follow their favorite trainers. It's kind of like a fitness social media platform. Alright, moving on to some funding news now. Insurtech startup DeHaat Insurance, according to some reports, has raised $19 million, that's 135 crore rupees, at a valuation of upwards of $1 billion, making it a unicorn from A91 Partners, Fairing Capital, and TVS Capital. Founded by Kamesh Goyal in 2017, DeHaat Insurance is a new age insurance startup that offers multiple insurance products like car, bike, health, property, and travel through an online platform. Apart from that, they also make it super easy for their customers to file claims without the need of filling in any complicated documents. DeHaat Insurance also used the pandemic to launch a fixed benefit cover for COVID-19. Thanks to their completely online operations and this new product, they managed to grow by 32% during the first 9 months of the pandemic, while the insurance industry at large barely grew by 0.1%. DeHaat Insurance has more than 20 million customers and claims to have been profitable in all 3 quarters of this financial year. Alright, next up in the funding news, hyperlocal delivery startup Dunzo has raised $40 million in its Series E round from Google, Lightbox, Evolvens, Hana Financial Investment, LGT Lightstone Espada, and Alteria. In case you don't know much about Dunzo yet, it was started by Kabir Biswas, Ankur Agarwal, Dalvir Suri, and Mukund Jha in 2015, and it enables people to order pretty much anything like groceries, medicine, or food from neighborhood stores and restaurants. You can also use Dunzo to send items like keys, chargers, or documents from one side of the city to the other. They're going to be using these fresh funds to focus on sustainable growth across their fastest growing cities like Mumbai, Chennai, and Pune in 2021. Alright, next up in the funding news, agri-tech startup DeHaat has raised $30 million in its Series C round from Process Ventures, RTP Global, Sequoia Capital India, FMO, Omnivore, and Egg Funder. Founded by Shashank Kumar, Manish Kumar, Amrendra Singh, Shyam Sundar, and Adarsh Srivastava in 2012, DeHaat helps farmers every step of the way from sowing their crops to selling them. They do this by providing them with a platform to buy agri inputs like seeds, pesticides, and fertilizers at affordable prices, and they also provide them with free of cost personal advisory on which crops to grow. They've also partnered with institutional firms to provide them with working capital, and later when the crop is ready, DeHaat enables farmers to sell their produce through its platform by connecting them directly with buyers. Currently, the startup operates in Bihar, UP, Jharkhand, and Odisha, and they've already served more than 400,000 farmers. They're going to be using these fresh funds to expand to Rajasthan, Maharashtra, and Madhya Pradesh, and eventually they're aiming to serve 10 million farmers. A part of these funds will also be used to hire talent, strengthen their technology platform, and explore acquisition opportunities. All right, that is all the startup news that I have for you guys this week. I hope you enjoyed the video, and if you did, make sure to hit the like button and also hit subscribe if you haven't already. Also, I just wanted to give a big shout out to all of our Backstage with Millionaires members, our unicorns and our decacorns. You guys are awesome, and your financial contribution to what we're doing really means a lot to us. Thank you guys so much for watching this episode of Backstage with Millionaires, and I will see you in the next one.